We've got the decision now, 3.5%, as expected.
That is exactly in line with market expectations. I mean, if we'd been having this conversation 3 weeks ago, people were looking for potentially a three-quarter point hike of the kind that we got last time around, 3.75%. But 3.5%, that takes us back to where we were 14 years ago. It's the highest level of bank rates for 14 years, as I say. It's kind of where the market has been looking over recent weeks. I'm just going to see if I can try and get some of the data up right now from the key thing to look for here is the vote, how the Monetary Policy Committee voted. I'm looking at the commentary here, Jane. They're saying more rises to come. So it was a 6-3 vote from the Monetary Policy Committee to raise to 3.5%. Obviously, there are a couple of doves on the MPC. And looking at the statement here, it says the Bank of England does not repeat the November statement that rates unlikely to reach peak implied by the markets. That's quite significant. Basically, last time around, when the Monetary Policy Committee, as I say, raised from 2.25% to 3%, there was a commentary there that they said market expectations for the future direction of interest rates had been overdone. They haven't said that this time around, which is very interesting. Now, as I said to you before we got this decision, Jane, expectations have been moderating in recent weeks as to where the terminal rate, where the peak bank rate will be in this cycle. And so maybe the bank feels that their job is done for the time being. I'm trying to find out the breakdown here of the vote, which is pretty critical.
I've got that MPC members Teniero and Dringo voted to keep rate at 3%. Mann voted for 3.75. So that there gives you the three that voted for the for what is not 3.5.
Well, that's very interesting because the point there is that the two who wanted to keep interest rates where they were, those are the doves that I was referring to. Catherine Mann at the other end of the spectrum, she's seen as very much the more hawkish end of the Monetary Policy Committee. And what is quite surprising, actually, is that she's the only member that voted for a three-quarter point raise today because several of her colleagues on the MPC, including Sir Dave Ramsden, who, of course, is a former Treasury official, he was seen as being quite hawkish as well. There are one or two of the others that voted for three-quarters last time that we thought might go again today. That's actually a pretty straightforward vote, 6-3 in that respect. Although it's effectively a three-way split because you've got two people there who didn't want interest rates to rise at all, one per member who wanted a three-quarter point rise, and the other six going for half of 1%. I think you could have made a case for them going more aggressively than that, given the extent to which inflation is still pretty much in the system. I think what may have tipped it, Jane, we got the core inflation numbers yesterday. Now, core inflation is the measure of inflation that strips out volatile elements such as energy prices, food and drink and tobacco. And on that measurement, inflation actually came down in November from 6.5% to, from 6.5% to 6.3%. That was lower than expected. And that is something that the Bank of England would have been very pleased to see because it suggests that the externally generated inflation that we've been getting around the world, largest result of the war in Ukraine, that is not feeding through necessarily to internally generated inflation. I'm looking at the statement now from the Monetary Policy Committee. Other things are on their mind there. There's a commentary here on the labour market. They're saying that although labour demand has begun to ease, the labour market remains very tight. They're pointing to the fact that unemployment rose very slightly to 3.7% in the 3 months to October. Vacancies have fallen back. So again, that is something that the MPC is concerned about. I'm looking at the bottom line here. It says the majority of the committee judges that should the economy evolve broadly in line with the November Monetary Policy Report projections, further increases in bank rate may be required for a sustainable rate of return of inflation to target. So that is a very, very clear warning from the Monetary Policy Committee that further interest rate rises are likely, as we were discussing a moment or two ago.
OK, Ian, thanks very much for that for now.